seconds, because even if we record, those seconds will be lost. And here we are on another block chat. What I was telling Fergus is that we leave out the first 9 to 11 seconds. So sometimes you see me telling whoever is with me on block chat, or either way chatting about something that's nonsense. What we're trying to do is lose that 9 to 11 seconds so that you hear the whole cast rather than part of it. Welcome to another block chat. Thank you all for joining us. Today, I have a very special guest and a new member to our team. And someone, by the way, I need to say here, his name is Fergus. His announcement on LinkedIn, or announcing that Fergus have joined Blocksquare's team, was the most popular post probably of announcing someone. Yeah, so obviously, definitely much more popular than announcing me joining Blocksquare a few years ago. Fergus, how are you?
I'm very well, Makram. It's a pleasure to be with you here this afternoon, my time. Yeah, and your time.
Yeah, and my time. When I have someone on block chat, usually who's not Dennis, I usually ask him, how would you like to be introduced? So I've asked Fergus, how would you like to be introduced? And Fergus sent me a big thing to be introduced. Now, to introduce Fergus, I definitely need much more than that. But I'll start by, Fergus, what's your handicap in golf?
Sorry, Makram, I missed all that. I'm afraid
you missed all that. What's your handicap? What's your handicap?
Oh, my handicap. I have many handicaps, but my golf handicap.
Golf handicap.
Yeah. My golf handicap moves around 6. So it's up and down around 6. It's a very frustrating handicap, but we are lucky in this little part of the world. I think we've got more golf courses per capita than any country in the world. So there's no excuse not to have a reasonable handicap.
Yeah, look, when anyone is having a chat with me and saying his handicap is anything 6 or 20, it's still great, because I probably they measure my handicap on a different measure of how lousy it is. Fergus, you've been into banking for so long. For those who don't know Fergus has been a senior banker and a top executive in several banks and organizations and institutions. I'll give you the space here, Fergus. If you can tell us more about your career, what have you done? And then we'll dig in and we'll see what is fun to talk about today.
Sure, Makram. Well, as you can probably hear from my accent, I'm from Ireland, and I live just south of Dublin in a little place called Wicklow, which is about 35 minutes from the centre of Dublin town. I've been working in banking for a long time, probably since just after World War II. But working in various Irish banks, UK banks, banks in Asia. Spent some time in Singapore working with the Dutch bank Rabobank, which was very exciting. They're a very good bank. Have been lucky enough to be CEO of a number of financial institutions in Ireland over the period. And just as they say in the industry, off-ramping at the moment with Virgin Money in the UK, which is a cool bank. It's the UK's 6th bank. And I've had a number of roles over the last nearly 8 years in that bank on the ExCo. The most recent one is Chief Customer Experience Officer, where we're trying to bring together actually 3 banks that formed Virgin Money in the UK and modernize them, digitize them, and build a set of customer products and propositions and experiences that are fit for the 21st century. So I've been in banking in a long time, and I would have started in banking in the treasury, capital markets, derivative side of banking, which I think is a very good place to start, because that's where banks, that's where you run the balance sheet, the asset liability management, the funding, the liquidity. I think you learn an awful lot about banking and how banks create money and how they manage their balance sheets, or how they're supposed to manage them. And then you move on from that into the side. So lots of learning, lots of experience in that area. And just finishing up with Virgin Money. And I came across this really cool company called Blocksquare. We kind of found each other, as you know, because you and I had some very early prefatory meetings. And I think it's really cool what you guys are doing. The journey you've been on so far, you've made a huge amount of progress. And at the same time, it's almost overwhelming, the potential size of these markets, the potential use cases. And coming from banking, I see quite a few opportunities, clearly. That's the main reason one is here, to meld together, bring together the old and the new. The Web3 meets some of the better things around centralized finance and fractional banking. And I think the future is going to be a hybrid between all of these things, the best of all of them, rather than one fails and one succeeds. So it's really, really exciting. And I'm learning a load of stuff from you guys every day.
You obviously noticed, guys, that we probably are also learning a lot of stuff from Fergus every day. Such a career. It's amazing. First, we're very excited to have you on the team. The community was very excited to have you as part of our energy. It's amazing to hear what we've heard now from someone who treats money as a product. Yeah, bankers treat money as a product, and I believe the only thing I have from bankers probably is I treat money like a product, as a product. And this is how I would define a banker. A banker is someone who treats money like a product. And the experience you have is vast. Parts of this experience feed directly into the start of industries within banking and start of sectors within banking, but also feed perfectly into the start of the impact of tokenization, real estate digitization, and fractionalization on the world. You also had experience in mortgage and mortgages. You headed not only international bank, but you headed mortgage divisions. And your involvement in mortgages also is interesting and something that we will talk about today. So I will promise you all a very interesting session with Fergus. Fergus is a father as well as a tennis player, a golf player. We discovered that his handicap is around 6, his golf handicap. He is a good tennis player, I hear. I haven't. We are yet to test that. Yeah, I hope that I do better at tennis than Fergus, just to balance out what he does at golf.
Then, I look forward to playing.
I look forward as well. Fergus, let's start from the most recent experience you have. Now, by the way, guys, Fergus will be heading, developing the institutional side of Reach. So as Blocksquare, we are creating infrastructure for enterprise, for entrepreneurs, for startups to utilize so that they can develop a real estate tokenization platform and they can feed into their local market and local economy, thus having a global impact. At the same time, there is a very big part which is institutional. Banks hold so much real estate. The recent collaboration we started with LBBW showed how big the potential is there with banks and with other institutions. And we hear about huge deals happening in the commercial real estate and influencing actually part of real estate market, capital markets and beyond. And it starts with banks. So Fergus will be spearheading that motion, that move to the institutions and to be able to talk to institutions the right language, because he have walked the walk for so long and talked the talk as well. Let's start from the most recent experience. You're wrapping up with Virgin Money. You actually saw an opportunity in tokenization while you were with Virgin Money. And that opportunity meant to you that it's very meaningful to build on and develop and invest time, efforts in, and your knowledge and your career, and the future of your career in, What was that? What was the thing that sparked that interest? What did you see in real estate tokenization that told you that's the right industry to tackle, or part of industry tackle, or actually it's a bridge between two industries? What did you see that interested you, Fergus?
Makram, it's a really good question, and I'll try and keep it as succinct as I can. It's a really good question. In my case, I feel I am a lifetime learner. I could play golf, but I think I'd get bored, and I was looking for new challenges. I remember sitting around at a UK industry sector meeting with other senior executives of other banks in the UK. And we were just waiting for a meeting to start, and somebody mentioned crypto or blockchain. And I remember around the room, these were very senior people, men and women. I remember around the room that we started crypto and blockchain, and basically no one had a clue. People had a very veneer understanding. They'd make one or two comments, and then after that, there was really quite nothing. So I went, that's interesting, because that includes me. We're defensive, and we don't really understand this industry very, very well. And then, so when the bank was offering me, would you like to study something as you off-ramp with the bank? I said, yeah, I'd like to study blockchain. So I've started to do, back a while ago, an MSc in blockchain to understand it properly, so that I am not one of those people in the future that kind of says one or two things and then has nothing else to say on the topic. And the more I delved into it, Makram, the more I understood, and I'm still learning, of course. I'm about halfway through that MSc at the moment. The more I understood that some of the really difficult, painful journeys that we have in bank, customer journeys, product journeys, i.e. the time to market and the cost to serve, the time it takes to get a product, a proposition to market to your customers, the cost of doing that can be enabled significantly, can be disrupted, can be improved, can be made more transparent, can be made faster, etc., can be made more efficient through blockchain. And the most complex journey in banking, in retail banking at least, is the mortgage journey. And it's a journey in banks that we fret over for 20, 30, 40 years in terms of how to try to make it better. And the banks are making good progress in relation to that and in digitizing their books. But it's mainly the front end to the customer. And behind all of that, Makram, still banks in the world, Europe, etc., it's a general comment, is a spaghetti junction of stable but very old, they could be 40-year-old mainframes and databases that the bank's business is running on. They're stable, nearly all of them. There's the odd one that blows up, and then there's a drama, but in general, but very old-fashioned, very almost analog. And that journey is screaming to be modernized through blockchain. As you know, some other journeys are too, like carbon credits, securities issuance in banks again, and other and companies, bonds, etc., payments. But certainly the mortgage journey is. And then I sort of added up 2 and 2 is 4 or maybe 5. I was doing my MSc. I was researching a thesis, and I looked at 17 companies around the world that were providers of infrastructure for property tokenization, which would include significant around mortgages, touching off mortgages. And I came across in Europe, most of these companies were in the US, but in Europe, I came across a company called Blocksquare. And they talked about the future of buying, selling, and holding real estate, which is on our banner and which is, I think, our purpose. And I said, they're interesting. I'd like to work with a company in Europe. And I sent an email through or a text through, and the rest is history. So I think Blocksquare is very well positioned to work as that white label platform provider right across the industry, in hundreds of thousands maybe of use cases. Because mortgages, there's something like 6.7 trillion euro of mortgages on European bank balance sheets. Obviously, we have references to 350 trillion, I mean, the numbers are ridiculous, of dollars of property in the world. And of course, that number is wrong. I think that one might be, I think it might be a Bank of America number. It's wrong. It's wrong because how can we know? We just don't know for sure. But directionally, is it 340, 360, 350 trillion? Doesn't really matter. It's almost a ridiculous number. So when we look at mortgage banking and perfecting security against a mortgage loan, we're back in the 1960s. And, there's just such a chasm between that and how we book a holiday, or how we book an apartment or whatever in life, where we are used to digitization, we're used to instant gratification. I don't mean that in a bad way, and we're used to things happening real time. And so I didn't need to be very smart to sort of say, okay, 2 and 2 here is 4 or 5. There's a synergy. Banking really needs to get its act together and understand blockchain much better and start to build those use cases. The first thing that needs to be done is awareness and education, because although I'm talking here to you today around this in detail, most banks are not even having the conversation.
And they don't have the conversation because people in general, we're all enemies to what we don't understand and what we don't know. And what you've done, choosing blockchain to take an endeavor of learning, is, in my opinion, a pioneering act, because generally most of us are resistant to change, and that is for every single one of us in every detail of our lives, of our daily lives. Taking such a task and understanding it puts you in a position that most bankers, most executives, and most boards are not equipped for today. Because if you ask an executive to talk about a subject that he doesn't understand, you're putting him in a bad position. You're putting him on the spot. Similarly, a board member. So in every organization, there may be a pioneer here or there, but that pioneer has the subject of pioneering is something that he isn't good or well famous for. It's not a positive on his daily collaborations and daily conversations with people. It's actually what people want to silence him about. So institutions, while understanding institutions, understanding the pain points, understanding the impact of tokenization, the good impact of tokenization is huge. Now, what is the good impact of tokenization? So let's talk about real estate in different ways. First, acquisition and ownership of real estate, which is the digitizing and the fractionalizing part of real estate, but also that social impact on societies. You had a mortgage division in a bank, and you obviously have seen all what runs there, have seen the good things and the bad, have seen the rough days and the days where everything was blossoming. What have you learned there that tokenization solves? What have you learned there that tokenization can have a social impact on communities because it exists the way it exists?
Yeah. Again, it's a huge question and a great question, Makram. And if I can, in summary, in banks, in life, in economy at the moment, as you know, in general, but in banks, when you're buying and selling a property, it's too much about the mortgage and buying and selling the property. What the customer wants, say that the individual, let's not look at corporates yet, let's just look at people buying and selling houses. They want to live in a house. It's an experience. They want to own the house. They want to live in the house. They don't want to talk about the mortgage. They don't want to talk about the loan. It's part of their lives. And banking, it's very difficult for banking to be experiential. It's if I'm a I don't know, if I make chairs, you can sit on the chair, you can see the chair, you can like the color of the chair, you can like the wood or not, whatever. It's experiential. Banking is extremely cognitive. It numbers and yields and costs, and it's abstract. And we in banking struggle to make it an experience for the customer. It's a very cold product. So that coldness is further accentuated by the length of time it takes to do things, and the administrative sign-offs and the amount of paper. And so, for example, on what is the biggest financial decision in most people's lives, buying a house, taking out a mortgage, in most people's, becomes this frankly tortuous journey with intermediaries, with banks, with solicitors, lawyers, whatever you want to call it, notaries, depending on the jurisdiction you're in, and exactly. It takes a long time. And I know that because of, having been the CEO of a mortgage bank. I know that because my son has just bought his first house. And even with his father having the background I have, that was painful. So how can we make the journey much more experiential, much more about the customer and the experience of owning the home, seeing that, being in it, touching it, rather than a piece of paper that says, I owe a lot of money, and another piece of paper that says, these are the title deeds and they go into somebody's vault for 20 years. It's foreboding for people, and it's difficult. Now, young people these days, they understand.
Young, he's talking about me. Fergus is talking about me now. Young.
Yeah, people like you. You understand that you grew up as a digital native. You grew up as a digital native. You're comfortable.
Fergus, stop talking about me. Now he's talking about my son is slightly older. Please go ahead.
Yeah. So someone like my son, right? He's grown up, and there's millions like him, of course. He's grown up as a digital native. He's grown up playing computer games. He understands gamification. He's used to it. He expects it. He expects real-time service every time, once and done. He expects wow moments, and he doesn't want paper, doesn't like paper. Why would I have to sign something with a wet signature, et cetera, et cetera. So blockchain, particularly with a cool front end, allows us to create that type of experience around atomic settlement, 24/7, efficiency, immutability, transferability, the recording of information in a really accurate way, and it moves us away from almost a kind of quite but 18 saying and notarized
rigidity
under common law. So it's screaming that from the bank's efficiency point of view, their ability to because, by the way, in mortgage banking, for example, we make loads of mistakes in the bank because there's operational risk. It's not that the people aren't good. It's not that they're not qualified. But if you're dealing with millions of or hundreds of thousands of mortgages, and a piece of paper gets lost, Macron, or a title deed gets lost, and that can have a completely disproportionate effect on the customer. It can make them ill. They're bridging a loan. They're bridging a house purchase and sale. It's their first, maybe, or that's another scenario might be it's their first time to ever own a home. Or they want to release equity in their home. They're making up 75 years old, more like Maya, and they want to release they want to release equity in their home. But then we lose the title deeds, or we lose the application, or whatever. And so it is not consistent with intelligent personal financial services. It's not consistent with being complete, connected, consistent. It's not consistent with the sense of, anytime, any place, anywhere banking. And so it needs to change. And that's why I said, right, off-ramping with Virgin to make it my thing, you know, in the next life, career, whatever you want to call it, to try to really tackle this and look at this and see how we can modernize it. And again, then I came up with met Blocksquare, and off we go. But there is a almost overwhelming opportunity, Macron, which is, you know, when you look at it, it's almost, the opportunity is almost too big. You kind of go, oh my God, you know, where do you start? But we've got to start somewhere. And you know, I do believe that in, I don't know how many years' time, when we think of property, we will think of fractionalization, digitization, tokenization. So, you know, think of the person who wants equity moment. You know, they can do an equity release mortgage that might cost 7, 8, 9% per annum. It's expensive. So if they hold that for 10 years, that's doubling the cost. We have young people buying apartments, and wouldn't it be so cool if they could buy them through digital tokens rather than the process I just mentioned to you, which is fraught with operational risk and timelines, etc. Imagine being the first bank in Europe or some country in Europe that can say, we are the first bank that has successfully taken a mortgage on that apartment block over there or that house over there, with perfected security, which is a token. And that has been successfully registered, etc., legal, regulatory, all good. That is a real, genuine USP for that bank, rather than saying, as we do, oh, our mortgage offer this week is, you know, 5.2%, and some other banks 5.3. Yeah, and we try to hustle, you know, and have sharp elbows in the market with our pricing, with our this, with our that. But really, a bank mortgage is more cognitive. It's utilitarian. We want to try and make it more experiential. And one of the ways of doing that is digitizing it.
Guys, I'm sure you're hearing Mr. Murphy here with his amazing knowledge share. We apologize for sometimes the image is glitchy, but I'm sure you're not here to see us as much as to hear us. Otherwise, look at me and hear Fergus.
It's probably better. It's probably best if people don't see me anyway.
Yeah, you're the best. So, guys, the very important thing we need to talk about here. If you've heard Fergus now, you've heard about the client, you've heard about the consumer, you've heard about the challenge for the institution, you've heard about the non-efficiency, you've heard about the solution. So what we are doing is we're tackling a problem that bankers know exists and know is huge. Consumers suffer of. Thus, two parts of the transaction feel the pain of. We're approaching both parts with a solution. Now, we used to be approaching it with the consumer. Now we will be approaching it as well with the institution, offering the institution, as Mr. Fergus Murphy said, we're approaching them with the knowledge, with the education, and then hopefully that will add to their acceptability to adopt and to adapt their processes, and to work alongside us to impact the consumer and the bank in a positive manner and the institution in a positive manner. Do you think that you as a consumer are the only party feeling the pain when you are trying to purchase a house? I would confirm to you 100%. Processes of the past do not solve problems of the future. Imagine that you still run on the same operating system for your computer today that you ran on 20 years ago. Trust me, you'll not have any single thing on that computer that's private. You'll be hacked, you, you'll be stripped of your data, and much more. We cannot continue using the same processes. We need to streamline things in a more transparent, efficient, and immutable way. I promised you before that we will stick to the 30-minute thing, but this is so valuable. I do not believe we have to respect that promise today. We have a rain check on that. So I want to talk about a very important subject, which is the impact on the institutions that currently are vehicles to own and purchase and sell commercial real estate, be it REITs, be it crowdfunding solutions. And those do have their own challenges alongside banks. So real estate funds, real estate investment trusts, and all other parties, institutions that do invest in real estate by nature, have relationships with banking and with bankers, have relationships with consumers as well. They have major challenges. What are they that you believe can be fixed by tokenization of real estate? And what are they that can be fixed just by digitization, the element of creating a digital reference and the changing the process through that type of tokenization, or tokenization where you fractionalize and digitize, where you have the whole spectrum do, which is what we concentrate on as Blocksquare. What would that add to all parties involved, and what would it solve from the structure to the vehicles to the institutions to the people involved, be it consumers or parties involved in managing that money?
Yeah, again, I'm delighted you went there. I was going to mention it as well. REITs, real estate investment trusts, of course, they borrow money, right? So they borrow money from banks as well. But they are big commercial. I just see a fox walked by. There you go. In the countryside in Ireland. I don't know if anyone saw the fox.
Way, I did. I thought
that wasn't a dog. That was a fox.
That's amazing.
There you go. I have my own little zoo. I have a big Labrador. I'm surprised the Labrador wasn't chasing the fox. Anyway, that's good. That's special effects. But REITs obviously borrow money, and they are significant customers of banks as well. In terms of collateralizing, partly depends on which strategy the REIT is following at a particular point in time. But they have exactly the same type of clunky processes and difficulties that we described earlier on, so I won't repeat them again, in terms of how you perfect security against a loan, which the loan is being used to buy property or to refurbish property or whatever. And so REITs as well are expensive. There are a lot of fees involved. ETFs. There's a lack of specificity. You're investing in the REIT, which is investing in a region or a globe or maybe a country. And one of the things I love for REITs going forward, or for the next generation of REITs that we create, I suppose they may not be called REITs, they might be called something slightly different, will be this ability to say, that house over there, apartment block over there on that corner, I want to invest in that. Now, I could have 7 or 8 reasons why I want to invest in that, rather than one in another street or in another country. And that granularity, ability to invest with specificity, again, it's just so, it's Web3, it's that sovereignty of the user and the owner, and that ability to build a strategy, either an advised one or one that you're advising yourself on, where I want to own, I'm going to make this up, Makram, property in Milan, Paris, and Geneva. I don't want to own, and this is just an example, property in Vienna and in London, okay, or vice versa. And so you can't really do that at the moment. You can't do it for sure. And you certainly can't do it in a fractionalized manner. And so REITs are clunky with respect to people who run REITs, and ETFs are generic. And anyway, they cover maybe 1 or 2% of the property in the world. And the other 90-ish 8% is in private hands, illiquid. We hardly know it's there sometimes, depending on the country. So the opportunity to bring new, at times better, but also just even at times different products, propositions to the market for investment is, again, just enormous. If we're to believe that, again, $350 trillion of property is sitting in the world, again, doesn't really matter if it's that big or whatever. It's just ridiculously large. So again, that's where it can be a little bit overwhelming. But for REITs, for ETFs, for fund managers, as well as for banks, for insurance companies. Insurance companies are trying to match long-term assets with long-term liabilities. They have a long-term liability, which, maybe it's my life, and hopefully I'm going to live for another, you tell me, Macron, 30 years, I hope.
Much more probably. You beat Charlie Munger. God bless his soul.
So how do they match that liability? I'm paying them a premium every year. Let's make it up, right? So they need long-term assets, and they need to be able to get in and out of markets. They need to be able to invest in specific things. How cool could tokenization, property tokenization, be for them in terms of building a customized portfolio that matches their assets in terms of maturity date, looking at annuity tables, etc., and in terms of actual amount of dollars or stable coins or crypto or whatever. And so I think the imagination can run here is of the use cases and the way tokenization in property can be brought to bear on institutions as well as individuals over the next 10 years. And I'm really excited about being able to just, at the beginning, sit down with an insurance company, sit down with a bank, sit down with a REIT, and just have the kind of conversation we're having now. Because I expect, Macron, that a guy or a lady in one of these companies like I've just been for the last 30 years will go, oh yeah, but in our bank, I know this particular piece is really poor. And actually, this little piece over here is actually quite good, Fergus. But everyone will have their own journey and experience and pain points, and therefore, quite customized. As well as a lot of this being generic, and you roll something out that more or less works for everyone. So I think it could be very exciting. And looking around Europe, I think that, to me, again, just focusing in on Blocksquare, we seem to be the best prepared to tackle this. What we need is lots of bright people, which I think we have, not including me, and we need lots of energy.
Neither including me.
Yeah, I don't know about that. And we need lots of energy. Lots of energy, because there's just listening to Dennis the other day talking. He made the point, and I think it was with you in one of the block chats. There's a compounding effect of the work, and we're at such an early stage that we haven't hit that S curve yet of web scaling or blitz scaling, I think they call it sometimes, where suddenly this becomes something that everyone is going to talk about. There are some people talking about it, but I think we will wake up some Monday morning and we look in the rear view mirror and a lot of people will be talking about it. So you've got to be early. You've got to be an early adopter as Blocksquare. You've got to be an early adopter as a bank. You don't want to be the third bank in. I'm going to make Finland that's perfected security on a mortgage with a token. You want to be the first one. And so there's so much to be done.
A few years ago, I said on a block chat, if Marriott knew what Airbnb can become, they would have been able to create a better Airbnb than Airbnb, or bought Airbnb for a few pennies. Yet they haven't. Now, Marriott can afford that because Airbnb is challenged big time today. In finance, when something becomes mainstream, it dominates, and the popcorn effect is huge. Do you, as an institution, think you can afford to do what Marriott done in the hospitality industry, in the banking industry? Can you afford to be a follower rather than a leader? In the hospitality industry, it's known that companies like Marriott is a follower. They don't want to ever open a market. And I mentioned Marriott so many times because I am an ex-Marriott. I started part of my career in Marriott. They are a follower. Fairmont may be the same. And. Can you be a follower in banking? I doubt you can. What we are saying here, what Fergus said here, is huge. One, I say always a good choice is one that puts you, or a good decision is one that puts you in the right place to take another better one. When you are talking REITs today, you are taking a closed funnel. It's wide open on the entry. And similarly is crowdfunding solutions. And it's quite narrow on the exit. What you want in finance is the other way around.
Yeah.
Do you believe that every investment manager is a crook? Not really. Does he want to help people he invests the money for? Most probably. And I wouldn't say everyone, but I would say most. If he's able to still make the profit he believes he deserves, while charging people 0.5% rather than 1.5%, do you think he wouldn't? If he's able to be part of a structure similar to a REIT, a future REIT, that rather than penalizing people because of times of entry and making the only financial situation suitable for people is entering when everything is falling apart and they're about to go bankrupt as a REIT, and then exiting whenever things blossom, if things have blossomed for a REIT, and living those types of cycles. Is it really that way? REITs hold some of the best real estate in the world, yet we see too many of them in trouble so often. Mispriced. Pricing is way below their liquidation value. There's a reason behind that. Fergus Murphy will be talking to you as REITs. We'll be ready to have a chat. And why not have a chat? Maybe you will be part of those who will go mainstream first. And when someone looks in the rearview mirror, he would see you, one of those people in the crowd or institutions in the crowd that made a difference, rather than one of the ones that's trying to follow. In banking and in finance, the future is for those who lead, because the money you make and you regenerate and the money you are able to work with, to play with, is people's money, is the crowd's money. Banks are not solid states of so much capital put by few parties and is a closed organization. Not really. Banks have a little bit of capital from equity holders and everything else from the crowd.
Mm-hmm.
And I call every single one a stakeholder. If you are a bank, if you are a fund, if you are a player in that part of the market, if you're a company that runs on a float, Fergus mentioned insurance companies, some of the best businesses in the world, they run a float. That's their business. They have a float. They have $100 billion, $50 billion floating. And that's the money that's invested. And they have a long-term liability, which is my life, which is my health, which is the accident that may happen. But they are companies that run on a float. Berkshire Hathaway, I would argue, have been built off a float, a company that had a float. And That's very smart. All of those companies would benefit much from a more efficient, more transparent, immutably recorded process that allows everyone to play equal and to have access. Do banks want only few elites to be able to own property? Or will banks benefit more from making everyone bankable and everyone investable? The other way around. They want every single party. Goldman Sachs is investing in companies that have investments in Africa to make every single party, individual that's non-bankable today to be bankable, to have a credit score. There's a UK company called Bbox. It took on that. Two guys, I believe Stanford, if I'm not mistaken, out of the university, started working on a concept, and today it's worth few billions, I believe. So banks do benefit from that. Yep. If you're a bank, if you work for a bank, if you're part of a financial institution, if you're part of an insurance company, pension fund, a REIT, contact Fergus or any of our team members, and we'll get you in touch with Fergus within the coming few days or weeks. The faster you do it, the better it is for you. Fergus is someone who've lived what you are living today, understands exactly what it is, and is educating himself and have started educating himself since a very long time on the future of what the asset class that impacts your balance sheet so much. It impacts your balance sheet so much that most central banks in the world prohibit banks from holding real estate. This is how big it is. Talk to us, and we will hopefully make the difference. Fergus, I enjoyed this chat with you so much. I believe we can talk for another 2 hours, but we already crossed more than 50% of what we promised people. We promised them to keep it at 30 minutes. Do you have anything else to share with us or that you would like to say?
No, I really enjoyed the chat, Makram. Anything else would take another 3 hours, and there's lots of micro use cases that I'd love to go through, but we don't have the time. But there are many that are in my head that I can conceptualize, that I'm looking forward to whiteboarding, with ourselves and with banks and with REITs, and working through stuff that needs to be, solutions need to still be found in terms of some legals, some regulatory, etc. Of course, if it was easy, it would already be done. But we're going to make it happen. So all good. I'm going to now go out and chase the fox, see where the fox is, see where the dog is. The dog didn't do its job, and see what the story is. Hopefully the fox will eat me.
Fergus, that will be his last interview. The fox ate Fergus. That's the story you read soon. Fergus, I really enjoyed. I'm excited about your role at Blocksquare, guys. Fergus is someone who have done a very lucrative career, and today he's doing this because it's fun to him. It's intriguing to him. I'm doing the same. Several members of our team are there and pushing forward because they have fun. They're enjoying what they're doing. Every single one can do something else that can pay more today, but nothing and no one can do anything that pays more in fun today and pays more in funds tomorrow. The future is ours. Fergus Murphy, thank you so much for being part of our energy today, and for being part of our energy for the rest of the future, because as a member of our team, appreciate having you as someone who's spearheading, targeting, getting the solution to the right hand that can make it mainstream. Enjoy your day and your evening, and the fox chase. Have a good day, everyone. Thank you all.
Bye, everyone.
To another Block Chat. Have a good day.
Thanks, Makram.